What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is December 15th of 2023. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, we're not only going to be talking about Bitcoin's price and what we're expecting for over the next couple of days and weeks, but outside of that as well, we're going to be talking about meme coins. How do you approach the craze? Is it time to go all in, or is there a more reasonable and risk-adjusted approach where you can still benefit from the upside in these plays? And outside of all that as well, we're going to be talking about the macro scene. I want to talk about something going on that I think many people are simply ignoring, that are getting themselves detached from reality. Outside of all this as well, we've also got a sponsored review of Oval 3, one of the leading projects in the crypto space when it comes to fantasy sports and Web3. So stay tuned for that. You guys won't want to miss it. And if you enjoy the video, consider dropping a like. It's one of the greatest ways you can support the channel. All right, guys, let's go ahead and kick things off here. So I want to start here by talking about Bitcoin. For me, really, the game is simple here. As Bitcoin is holding up here on the 21-day moving average, right in that golden pocket between the 21-day EMA and 21-day SMA, so long as it's doing that here, Bitcoin right now in the near term is bullish here. Now, again, as you all know, as I'll talk a little bit as we go through the video, I'm not of the idea that we're going to do all-time highs, but I do believe that there is a chance we could come up here relatively close, essentially keeping in mind the line of ascending resistance, which would lead us somewhere here around 52,500, or coming up here and facing resistance at the 200-day shot down range back in March of 2020 at around 48K. This is your pocket range where I see resistance coming into play. If I were to give you guys my best guess here, that is where I think kind of the final blow off top would come. And this aligns here into a potential January launch of a Bitcoin ETF or some kind of surprise denial. Irrespective of what happens, I think that's the kind of price target where you get too much euphoria and optimism comparative to global liquidity, comparative to the real risk on sentiment that there is right now, which is relatively lacking. I understand crypto, it seems crazy, but you all know what I mean when it comes to the potential for a retail trader craze when it comes to crypto. I just don't see that coming here, as much as there could be some nice altcoin moves here in the near term. And that kind of leads me to talking about what we'll discuss later on, which is altcoins. But to just kind of wrap this up here, so long as that 21 day is holding here, so long as price is holding above there, I think, again, that's your short-term target range. And after that, if we face some chop there, if we go through the ETF event, either way, that's going to probably be where you're looking for a short opportunity in the market. You don't have to short. You could just simply be in cash. You could hold your positions if you believe I'm wrong. Just letting you know my thoughts there. I think it's either going to be a move to cash position or a shorting opportunity at that range, depending on the shift in momentum and its reaction with that 21-day moving average, which has been holding up price here. Outside of that as well, total 3 picking up here, recovering a lot of its losses off the 21-day, bouncing up here towards its highest level again since back here in May 2022. So this is, again, that range here where I think we're going to finally start to see Bitcoin dominance starting to shrink. You're going to start seeing some altcoins move. And this leads me into talking about a topic which, again, I understand some people love, some people hate. Irrespective, we're traders at the end of the day, and we got to talk about what the market is trending for right now. The big thing we got to discuss here is what's going on with meme coins, particularly BONK. Now, I'm just going to give you guys a very quick pitch here. BONK is a meme coin on the Solana blockchain. And outside of that as well, if you really want to try to make an argument for it in the same way that Shiba Inu and some other type of meme coin projects claim that they're building their own ecosystem and their own swapping platform and all these things, it's so much more than a meme coin, a lot of people say. Guys, at the end of the day, it's a meme coin. And that's why people are buying it here. And they're buying it with the assumption that this could potentially be the next Dogecoin. It could be the next Shiba Inu. And I think we all know how crazy some of those got back in 2021. So a lot of people are really driven to this because of its virality, the marketing that comes from the brand here, or the meme, so to speak. And we can see that this is, again, similar to ordinals and a lot of other plays we've discussed here on the channel that have done well. Every time we get close to that 21 day and we find nice consistent baseline support at certain ranges, price usually extends higher. This is what you want to see in potential market leader plays that you want to trade and invest in, irrespective of the fundamentals. For short-term trades, these are momentum plays. Yesterday, it went up 89%. Right, and this isn't the only time it's done that. Within 2 days here back in early December, the combined move was well over 60%. You saw here in November a 55% daily move. Here in November, 2 consecutive days of 50% plus moves, just absolutely bonkers stuff. And the first thing I'm going to tell you guys here before we even talk about how to approach these things is I'm only going over this pricing data to let you know that like looking for strong players is the objective. You do not want to buy plays that are just, a certain percentage down. There's rare cases where technical setups historically will show you that that's a good way to approach it. But in most cases, we want to find new plays. And the ones that are continuing to hold above their moving averages are continuing to have these big moves and lead forward in the market because they usually tend to continue doing so until the trend actually stops. And usually you can have very good gauges that protect you and have you only taking minimal losses if you get in too late to the trade, i.e. the 21-day, setting appropriate stop losses, after setting in entries after pullbacks, right? There are all kinds of ways you can do this. But I also want to make one thing clear, which is that you guys shouldn't play hindsight on yourself. Don't be upset if you missed BONK. BONK is similar to SHIB, similar to Doge, is one of a million opportunities you will have in your life. So don't get too caught up on that. Now, I also want to send a signal here, which is that while I'm not screaming to the roof that you got to go buy BONK and all these meme coins, I'm actually a bit hesitant at this point. The big thing I want to let you guys know about is how to actually trade these meme coins. Now, obviously, as we can see for the past month, BONK has gone up a lot. It's gone up 890%, and many people may feel that it's too late to get in, to basically go in on a trade. And I'm, again, not telling you here to trade BONK more particularly. What I want to share here is how we can actually approach trading these things. Because if you think about it from a market cap perspective, $1.6 billion in the crypto space is substantial, but it's also not probably the upper bound of where this thing could go. There is an opportunity where, again, because these valuations are completely out the wazoo, it's just a matter of whether or not there's more buyers or sellers in any given moment. If there's a lot of euphoria and a lot of excess buying in the market, the price will continue to move up versus having excess selling, which will lead the price to go down. And we know that there are a lot of meme coins out there, whether it be the most established one like Dogecoin, which is at 13.7 billion, Shiba Inu, which is at 5.8 billion, or if we consider the fact that both of these coins were trading at market capitalizations, Dogecoin almost nearing $100 billion in the last bull market, and Shiba Inu going up to over 43 billion plus, we can obviously ask the question of whether or not in this case, BONK could go higher than that. Maybe it's just the start of a much bigger move. And Dogecoin had many of these parabolic moves. Within a month or so, it plateaued, maybe even corrected a bit, and then it went up again. These things can happen. But the big thing above all is that you do not want to be all 100% in these plays, guys. If you do have a play that is going to do a 20x multiple from this point, if in this case BONK is this cycle or this period of times meme coin that does well, then in this case, you could easily put in 5%, some amount that you can afford to lose, and you will still make phenomenal returns on your money. Right? And it's not just that. You can easily take 5-10% of your portfolio in the crypto space and sprinkle it across various different meme coins. There are all types of different plays out there in the market, some of which I'm watching as well, that I think, again, could very well repeat a lot of these moves. And maybe they don't get to the market cap extent of BONK, but they're going to make similar multiples. So again, it's about finding the ones that are trending, that are building good bases, and outside of that as well, making sure that you're not overexposed. And outside of that, having in mind, take profit levels that you're actually going to take returns on. Trust me when I say this, guys, you do not want to be the person holding the empty bag here. Probably the overwhelming majority of traders in Doge bought Dogecoin when it was probably at a $34+ billion market capitalization, meaning that here today, most people are at a loss, and they're probably going to be in a loss for a long period of time, irrespective of whether or not we get a continuation in altcoins. That's the key point I want you guys to know about here. Don't get caught holding an empty bag. Have take profit levels, have a reasonable stop set, but give it that wiggle room and make sure that you're coming in on an entry on a pullback, right? Because if you can, for example, on a name like BONK, get this like it was back a few days ago where it pulled back. Let's see if I can get the actual specific numbers here so it's a bit clearer to see. We can actually pull the BONK USDT chart from around, in this case, 0.0000147 down here towards 0.000096141, right? You're generally talking here about like a 33% pullback, as we've talked about in our altcoin cycle playbook video, right? Coming down close to that 21-day, on a market leader, you can easily set up an entry at a 30-33% pullback. You get your position in, and on top of that as well, you set a stop of like 30-50%. And this is, again, such a fractional part of your portfolio that you're either going to lose 0.5% or a percentage of your portfolio, or it could work out and hit your take profit levels that you set up at a 2x multiple, a 5x multiple, 10x multiple, where even if you just hit one of those levels, you will easily make up. If the rest of your trade that you didn't take profit on goes down and hits your stop, you will have already made substantial money. That's the key thing here, guys. And again, now those take profit levels are going to be dependent on your risk tolerance and where you think this thing can go. As much as I'm not a believer that this is going to get to the extent of SHIB or Doge like it did in the last bull market in the upper tens of billions of dollars, because simply put, I don't think the meme value is as big there. But outside of this, well, the biggest thing here is the lack of liquidity. There's not as much liquidity in the space as we had back then. And I think it's foolish to think that you're going to see the same kind of retail mania on these names, considering the lackluster amount of liquidity in the space. There's not even a massive surge in USDT like we had last time around if we want to talk about the micro liquidity, focusing purely on crypto. So set your expectations to reasonable degrees. I think this could easily go, if it plays out right, it could go to 5 billion, it could go to 10 billion at max. But again, who knows? Markets are crazy. I could be proven wrong. All you have to do is make sure you've got a reasonable approach and you understand the risk you're taking. Don't just go blindly all in and go, I like BONK, it's funny meme, haha, I made a 2x, this is great. Oh no, it's now down 75% of the month, but I still believe in the project. And then you end up being an empty back holder. Not a fun thing to do. Just something to be considerate of, guys. And this is, again, going to bring me to the macro, guys, more serious conversation, because meme coins are all fun and all. They can be great ways to make quick returns. They're momentum trades. We do not doubt that here on this channel, and I'm all for you guys taking upon those opportunities if you see fit. But I need to let you guys know that there is a feeling in the air after a year of really optimistic price action in crypto, really optimistic price action in equities. A lot of people are starting to feel like the soft landing narrative is here, meaning that the Fed has been able to deal with inflation, we have averted a recession, and everything is going to go back to being hunky-dory, and the Fed is going to continue lowering interest rates at an aggressive rate. They're going to potentially stop their quantitative tightening program and start flattening the balance sheet, maybe even increasing it in the future, i.e. printing more liquidity. I want you guys to just come back here to this chart, because whether or not you agree or disagree with me, the bond market tells you everything. You don't have to invest in bonds to understand why this is important. This is the yield curve. It is the separation between what you get on a US 10-year treasury, the yield you get, versus a 2-year. And we are still in minus or negative territory here, about half a percentage point negative, meaning that short-term maturity treasuries are paying more than long-term. Now, to put this in very simple terms, outside of explaining all the mechanics of why this happens and why we reach this kind of twilight zone area in bond markets, which really doesn't make much sense, you should expect that the longer-term treasuries, if you're putting your money up for government debt for a longer period of time, a longer maturity, should get paid more, right? As we see throughout most of history. But what we see is right before recessions, when markets get distorted, when markets get separate from reality, what you tend to find is that these yield curves become inverted, and then they start to uninvert when the pain arrives. Now, we've already started, if you want to talk from back here in July, we've seen that uninversion happen. And if we take a look back through history, right, the uninversion back in 2000 started in the earlier part of the year. And along with that as well, it started here in 2006, well before really the depths of the crash of 2007, 2008. My point here is to not get carried away, to not get separated from what's really going on. I'm not saying that this is something to hold you back from going out and making those meme trades, guys. Go ahead and do it. Like, go make those trades in the market. But let me tell you all something here. One of your number one indicators that things are about to head south, that it's time where the party is going to be ending, that the punch bowl is no longer full, and the hangover is likely coming in, is when we've gotten above the 200-day moving average and we make it support, like we did in December of 2000, or we did back here in June and May of 2007. I want to go ahead and take you guys here to the S&P 500, right? Excuse me, I'll take it here. Yep, S&P 500 here. Let's take a look at the last 2 times that happened. I have them mapped out here on the chart, here in December 2000, and here also between May and June of 2007. What happened after we crossed the 200-day and actually made it support? Well, dot-com bubble continued collapsing in a spectacular fashion. From that date, we saw equities continue to correct a whopping 43% after already pulling back a substantial, from the absolute high, substantial 12%, in total netting a total loss of around 50%. And the S&P 500, mind you, not the NASDAQ, which was much worse. Well, what about back here as well in June 2007? From that point on, markets went on to only increase by about 2.5%, afterwards crashing a total 56% in the S&P 500. Many people thought, return to the norm, right? Back to new all-time highs. That didn't play out very well for them. Now, we are seeing a lot of people, after 2 years, so we're coming back up here towards those previous highs in the NASDAQ and in the S&P 500 and in the Dow Jones. A lot of people thinking this is a return to the norm. We're going to print up. We're going to start going up to new all-time highs, and it's going to be great. I'm not going to tell you guys you can't deviate up here to 4,800. Hell, maybe you even come up in the S&P 500 to touch a big even level like 5,000. So long as the trend is there, you guys can trade it. I'm not arguing that here. What I am saying is that if you go into trying to quote-unquote trade the trend and the trend stops working in your favor and you start ignoring these fundamentals because you want to lean to a bullish bias, be very, very careful, because right now, that 200-day, which was acting as resistance, which we broke through here in September, is now here in December of 2023 acting as support to potentially form a higher low on that inversion on the yield curve. Be cautious of it. That's all I'm saying, guys. This could very well be the top of the trap that we've been discussing for a long period of time. It's not to say that you can't ride these waves in Bitcoin. It's not to say you can't ride the waves in the S&P 500, but when you factor it against global liquidity, you see just how much of a risk premium we are trading at right now. According and against liquidity, we are at a 10% premium from where we were back in February of 2020. Keep that in mind, guys. You gotta keep that in mind, because if you don't watch these indicators, you can get wrecked in the long term. It's not about what opportunities you miss. It's about the opportunities or attempts at opportunities you make that may leave you losing everything if you don't play your cards right. I learned that a lot over the past 12 years of trading, and it's important for me now as it was back then over the last 12 years, just as important here today. So, again, keep that in mind here, guys, when you're doing your research, when you're doing your own due diligence in the market, and more importantly, try to find things as well that are fundamentally strong and resilient. Plays that are generating revenue, that are actually going out there and building something useful for people, things that people are engaging in, and aren't just base speculation like meme coins. Well, one of those projects I would definitely consider you guys take a look into and do your own research on is the project we're going to be talking about today, our sponsor, which is none other than Oval 3. So let's go ahead and talk about what Oval 3 is aiming to do right now in the review. Alrighty, everyone. So in today's sponsored review, I want to spend some time to talk about what may very well be not only one of the largest fantasy sports applications in the crypto space, but a crypto project that's aiming to bring in tens, if not hundreds of thousands of new users going into the year of 2024. Today, we're talking about none other than Oval 3. Now, for those of you who haven't heard about Oval 3 just yet, to give you a broad overview, Oval 3 is aiming to build the premier fantasy sports platform utilizing Web3 technologies for for the sport market of rugby. Now, many of you already know how big rugby is, but I'll talk a little bit more about it as we go throughout the video. But the key component to understand here is that they're building off a new platform, Oval3, off of the platform of Fantasy Rugby World, which already has over 55,000 users. And they're aiming to utilize core components of Web3 like collectible NFT trading cards in order to scale this out much further. So I want to talk a little bit about what Oval3 has already built, the significant traction they've already seen throughout this past year, and outside of that as well, talk a little bit about how the actual game itself works and how the Oval3 token plays a key role in the ecosystem. So let's go ahead and start with the basics here, because whether or not you're a fan of rugby or not, it's important to understand just how big this market opportunity is. To start, Oval3 here is one of the few, if the only projects that's actually tackling this market right now. There's been lots of fantasy sports for traditional football, US football, a whole range of other sports. But to understand how big rugby is and to understand how untapped this market is, we need to build some simple comparisons here. In the United States, US football, for example, which I'm more familiar with, has over 400 million fans in its fan base globally. In the case of rugby, it's not only that they have a 400 million average fan base for dedicated users and fans in the space, but a soft fan base of over 800 million. So there is a lot of people out there in this market, and it's one that's relatively untapped when it comes to the fantasy market as well as Web3. So there's a lot of potential growth here and not too many competitors in this space. So Oval3 does have a prime opportunity to tap into this market, and they've already seen pretty significant traction. So how do they go about doing this here? Well, the first thing to understand here when it comes to Oval3 is its sheer network. Not only do they have 2,300 professional players within their network where you can collect various cards of certain degrees of rarity for these various players to have in your fantasy team, but outside of this, well, they have 42 clubs on board and 3 professional leagues, including the Pro D2, the Top 14, and the MLR. These are some of the biggest rugby leagues out there, including Tier 1 and Tier 2 leagues. And the biggest thing above all that I think speaks volumes here is that they have Antonio DuPont, which is the largest and best rugby player in the world, arguably speaking. So you've got a lot of heavyweights here, whether it's leagues, whether it's different types of teams or brands or clubs, coming on board and supporting what Oval3 is building. So now that we understand just the kind of significant traction that they've already gotten out of the gate here, how does the game itself actually work? So it's important to understand what fantasy sports are, for starters. If you're familiar with fantasy football or other types of fantasy sports out there, the general concept is relatively simple. Instead of going out there and betting on an already existing team during certain seasons, you instead build a custom team. It is essentially your fantasy dream team that you get to build. You get to add various particular players, and essentially how they perform throughout the season will vary these certain types of results. In this case, this is a different type of fantasy league, but it essentially allows you to do the same thing, to go out there and build your own custom team by getting certain collectible NFT cards of your favorite players, and depending on their performance within the game, you get various different types of scores and essentially see whether or not you can win or not for various prizes. That's the key goal here. It's a free-to-play game for people who want to participate in on a no-cost basis, but you can also go out and purchase or mint new collectible cards that you can add to your fantasy league. Now, there are a couple different types of things that I wanted to showcase here within the application. You can see that there are new cards that you can purchase for various prices here within the ecosystem, and you have different types of degrees of rarity here. You can choose unique cards, which are one of a kind, but along with that as well, you've got other different types of cards like super rare, rare, and limited. So essentially, depending on the degree of rarability and the skill set of each card, this is going to impact how your fantasy team performs in any given game. And once you've chosen your cards here within the ecosystem, you'll along with that be able to also trade them later on if you want on the market, or you essentially put them onto your team. Now again, there are some default cards here that you can do. You can build a team and test out the game for yourself. So there's no cost to entry here. You're welcome to just play and kind of grind through the game and get a feel for it. But if you want to go out there and have a better chance at winning and performing and really kind of put some stakes into the game, then essentially you can go out and get those cards on the market, either through, again, getting new cards here or trading already pre-existing ones on the market. So that's the core focus of the game here. But I think one of the biggest things here is that they have, again, some of the biggest partnerships and some of the biggest branding as well that's going to get Oval3 out into the spotlight. For example, when it comes to Oval3's network here, They have the French National Rugby League and Major League Rugby in the platform itself, and exclusive rights to work with these organizations. So I think that they've got a good foundation to continue scaling already as a platform itself. But outside of all this as well, there's a lot of key things to talk about when it comes to some of the traction, such as users and funding that they already have. In the case of Oval 3, they've already got over $1.8 million in funding from private investors. They raised a couple other $100,000 from one of their seed rounds, and they're continuously generating revenue on a monthly basis from selling the NFT cards. They've got over $70,000 in sales on a monthly basis. So essentially, we've already got a real business here. So much of crypto out there is an empty promise or a white paper. In this case, there is a real active market and a real target audience here that Oval has already been able to hit here within its collector base of fans and users. So I think that this is really exciting to see when it comes to the actual traction of the platform and how people are already starting to compete for various rewards, whether that be Oval 3 tokens, merch, and other types of perks and benefits within the application. And when you consider the fact that Oval 3 has already signed an exclusive partnership with the French National Rugby League, as well as Major League Rugby or MLR, two of the largest rugby leagues in the world, to be the exclusive Web3 application for fantasy rugby, you start to realize that this platform has a ton of potential if the fantasy sports area of Web3 continues to grow. I think the biggest reason this is a huge advantage is that having such market dominance here, it's going to allow them to have a lot of people participating in their tournaments. Now, they obviously have the All-Star tournament here, of the common rarity where anyone can compete here, but along with that as well, you can compete in higher tier ones that are going to be focused on more rare or super rare different types of cards. Again, it's important to understand that you'll not only likely have to buy some cards here if you want to compete in some of the larger tiers, but it's important to understand that you need to have cards that represent each type of position on the field. So you're essentially going to be really building out your fantasy team here in order to properly win and play out. Now, the big thing I wanted to talk about here from here on out is the Oval token. Now, when it comes to the actual token itself here, this is going to be a relatively new feature to the application, but essentially the Oval 3 token has a lot of key utilities within Oval as an application. The biggest one being here that NFT purchases going forward are going to be moving away from utilizing Matic as the currency of choice into Oval 3. So essentially speaking, if people want to purchase these various collectible NFTs, then they're going to have to utilize Oval 3 tokens. Now, I'm assuming that the application will make this a lot more streamlined, but generally speaking, that $70,000 of buy-side demand for various NFTs on a monthly basis is going to come in the form of Oval 3 tokens. Outside of this as well, there are other different types of benefits, whereas, for example, on the Oval 3 platform, if they run any type of marketing or advertising campaigns, 30% of revenue from that is going to go towards buying back the Oval 3 token. And on top of all of this as well, there's not only going to be a burn program for the token, but outside of that as well, there's going to be a governance system around Oval 3 as a project. So if you want to play an active role, if you're a huge rugby fan, if you're a big fantasy sports fan, and you really like what Oval 3 has built, and you want to continue helping to build out the ecosystem, there is going to be a governance on top of Oval 3 as a project where you as a token holder can participate in that. So this is the initial stage of features that you get from actually having the Oval 3 token. There's no doubt that there's probably going to be more utilities in the future and different ways where the Oval 3 token will be utilized for its fantasy rugby project. So for me personally, this is really exciting here. At the end of the day, I recommend if you guys are interested, whether it's getting some of the collectible NFTs yourself or getting some Oval 3 tokens, I recommend first that you do your own due diligence. You can get access to them through various launch pads like DAO Maker. There's a couple other ones that they're going to be launching through, but this is one that I'm definitely familiar with. But the big thing I would say above all is to do your own due diligence on it, guys. Try out the game first. You can use my link down below in the description where you guys can get a feel for the application. As with all new Web3 projects, again, this is an early stage project, but one in which has seen significant traction in the crypto space, and I think is tapping into a relatively unaddressed space within crypto as a whole. There's been so much focus on fantasy football or various football leagues in the world, but not much focus here on such a massive sport like rugby. And I think that considering the huge market opportunity and enter any of these major sports across the world, I think in this case that Oval 3 has position to really take off in the next couple of years as a fantasy sports platform in Web3. So if you guys are interested to learn more about it, I recommend you guys check out the link down below in the description where you can learn more about it. You can learn about what Oval 3 is built. You can test it out, play it for yourself, see if you like the game, and maybe consider getting some various NFTs as well as Oval 3 tokens from the launchpad. But that's it for today's video, everyone. Thank you all so much for watching. If you happen to enjoy this review as well as the core video, consider dropping a like. It's a great way to support the channel, and I'll see you guys on the next video on Monday. Take care, everyone. Stay safe, trade smart, and I'll see you in the next one.